So today we're going to be taking a look at my dividend investing portfolio. We're going to see which companies paid me out over the last month and what that total came out to, as well as maybe some other little things here in between. Now, I'm currently using M1 Finance as my investing portfolio. As you can see kind of right over here, this is a platform for a lot of long-term investors. So maybe if you were somebody on Robinhood or other platforms and didn't like it as much, M1 Finance is honestly a really cool one. Not for everybody, but a really awesome platform. I'm going to have a link for them in the show notes down below. They are still running a promotion where if you open an account and deposit over $1,000 in your portfolio, you do get a nice $30 bonus just for going through that process. Now, the nice thing is that does help support out the channel, but it is all entirely free for you to open up the account and get started. So if you have any questions, let me know in the comments below. Will be more than happy to help you guys out. So what we're going to do is kind of take a look here. Obviously, I shrunk down on screen size so you guys can see more of the actual computer here. So we're on my desktop, and I'm just double checking, making sure everything is on screen. So you can see here, this is titled Dividend Dentist because that's kind of my main focus for long-term growth. We just hit a new milestone today, $22,000. So if you've been following along, not even a month ago, we were at 19,604. So that's pretty awesome. I'm really excited to share that with you guys, just because that is pretty huge. I mean, that's a nice growth. And you can see right over here, just over that last month, we gained, actually, let me clear this all up. We gained over $653, 28 of which has been earned income from dividends, which is not necessarily always deposited directly into the account yet. We can talk about that later. But what I do also want to show you, and if you've been following along a little bit, you do know I like to kind of go back a little bit in time, partially so we can see some of the growth here too. You can see our total gains here is $3,216 in the last quarter. That's a great quarter to have. Over the last year, it's about $4,316. And then in our all-time, it's about $4,459. Now, the reason I want to go back in time is because I do like to show people this if you are somebody who's just getting started. Look, I started with $100 in this account. So, I know a lot of people look at 22,000 and might think like it's a lot, and it is. But, you can start with $100 and you can see over time, I just slowly started getting more comfortable with investing, started to understand how I wanted my portfolio, because that's a big deal too. I don't think a lot of people talk about that in videos as far as like, what kind of investor are you? Do you want to do long-term, short-term? Are you all about growth? Are you about growth and dividends? Are you about whatever the case may be? Because as for example, I am a dividend investor per my name right over here. But I actually care more about the dividend growth that is happening over time, because I don't need dividends right now. So for a lot of people, you'll hear about the like, hey, 4% dividends is what I go for. And that's great, but I'm not caring about 4% dividends today. I care about 4, 5, 6, 7% dividends down the road. And how I do that is by dividend growth. So if you're following along here on the channel, you're going to be hearing this a lot as far as dividend growth, because I think it's a pillar in this process when it comes to being able to grow my portfolio. So what we're going to do is take a look and see the impact this kind of stuff can have, obviously. But we're going to first and foremost look at what we earned in dividends for this last month. So we're going to go into our activities feed here up towards the top, and I'm going to go ahead and just switch this over to dividends only. So you're going to get a sneak peek at what we made in February. So I'll just cross that out there. And then I'll cross this one out here really quick too. Okay, so this is right over here what we made for the month of January. So I'm going to go over each one of these. So we had back on the 4th of January, we actually got paid out twice from ADP. Technically, it's just one holding from them. So the first one came out to 71 cents and the second one came out to $1.86. Next one is on the 7th, and this was from Pepsi. This was for $2.61. And then on the 15th, we got paid twice. One from DLR, which is Digital Realty Trust. That was a whopping $4.62, which was great, because if you have been seeing some of my old content, I actually was going in a little bit harder on DLR because they were actually down in my portfolio. So it's really cool to see a company that not only one came back because they were negative in the portfolio as a holding, because the value went lower than what I originally paid for. But not only did they come back, but now I'm getting a nicer dividend from them because of the fact that I kept putting more money in. And I'll show you guys the last time I made money on DLR and how much it was, if I can remember. So the next one on here is Realty Income. This is my only monthly paying dividend, and that is $2.83. And then on the 29th of January, I got NRZ. Shout out to NRZ holders right there. I got a whopping $12.42. So I'm really excited about all of this together. This all in total came out to $25.05 is what I made for the month. That's pretty awesome. So we're going to go into my dividend sheet right over here. Let me switch over my screen. Let me see if so this is my overall screen. I'm going to zoom in here in a second so I can show you guys. But just as a quick thing, if you're interested in a sheet like this, I actually give this away for free, no charge or anything. You guys just can check it out in the show notes down below. If you do want to support me, you guys can use any of the other links in the show notes. Those are all affiliate links. They don't charge you anything. I just make money on the back end for you guys. But this right here is entirely free. So if you want to download that, you can. So for the month right there, since we only finished up 1 month, we're at $25.05 that we average out so far. I should change this to 2021. Ignore that. And then right over here, you can see our total that we've earned with M1 Finance fully paid out was $217.58. So I'm pretty excited about that. So let's go ahead and zoom in. And let me see if I can, I guess we're like right here, but let me go. Let me like slide this just a little bit here. Okay, so what we're gonna do here is take a quick look. So back in January of 2020, we earned a total of $2.39. So what we've earned this month obviously far surpasses what we made the January prior, and then of course we didn't make anything in 2019. So there's not even anything to compare because it's actually when we started was 2 years ago. So in 2 years time, we've started earning $25.05 for the month of January. That's huge. Now, if you kind of look over in December of 2020, you'd been like, hey, Dennis, you made $45.04. That's way better than $25.05. Like, why is that the case? Well, in case you don't know, a lot of these companies, when they pay out their dividends, they pay out on actually, let me switch this over. They pay out on a quarterly basis typically. So not every company pays out the same. And so what that means is that typically, if you're going to be getting paid out every quarter from a given company, it's usually, every 3 months. So it's going to be easier to track that. So if you look at the companies that will pay out in January, they're not the same companies that pay out in February and not the same companies that pay out in March. So if we go back to this zoomed in screen here, so the way it kind of works is you could see the color differences, how the first quarter, the second quarter, the third quarter, and then the fourth quarter right here are all different colors. The reason for that is so they're distinguished between each other because those are kind of like the quarters that most companies go by. So what I like to do is actually compare the first month in a given quarter with the first month of the last quarter to see how that grew, because that's a better comparison, because most of the companies that paid out October of 2020 are the same companies that paid out in January 2021. So I'll kind of show you an example here. So let's kind of clear this up. You can still see it even on the zoomed in side here. So what I'm going to do is I'm going to zoom back into, what do we say, October. So these are just all dividends so you guys can see. Woo, look at all that payout. Right here. So October, right over here, you can see I didn't get paid a lot from all the companies because I don't have a lot of companies that pay out in these quarters or in this first month of every quarter. But you can see ADP, Realty Income, and then NRZ. We had Digital Realty Trust pop into January's. But last time it was actually at the end of December. So kind of something to keep in mind. But overall, I mean, it's generally the same company. So like, you can see here, AT&T is November 1st. They paid out February 1st. Apple, all these companies. So a lot of times it's going to be a cycle with the same companies over and over again. So again, we'll go here. So it's pretty much DLR and Pepsi. So Pepsi also got shifted over from where they were paying before. So that could be a factor too, right? So when we go back to... Oops, I overskipped it. So let's see, where was Pepsi? So Pepsi was in September of that time period as well. So these two companies right over here technically paid out in September timeframe and not the October timeframe. So in this chart, in this chart right here, they went towards that $30 total there. So it kind of makes it a little skewed, but at the same time, generally the case is the fact that when a company is paying out in that given month, that's generally when I should expect it or with relatively close to it. So that's what I'll also compare it to. So from October to January, you can see these two right here, 12.05 for October and 25.05 for January. Huge increase. So I really like that. I think that's exciting. A really cool thing too is you can see here, so Q1 is what I also like to check up on, right? So in 2019, we made a whopping 2 cents, and that was from Microsoft. And then in 2020, we made, at the end of the first 3 months of the year, $9.63 in the first 3 months. So the fact that we already surpassed that by quite a bit, over double on what we made in 2020, and we still have 3 more months to go, with the biggest month being usually the last month of the quarter. That's why you see something like, what we made in December or September or even June. Like, those months are usually higher in that given quarter, just because they tend to be the one where most companies are doing their payouts. So we have a ways to go for the first quarter. So I for sure think we're going to blow it out of the water. We're already past what we made in Q2 of 2020, which is even better than that, because obviously, we're increasing the amount that we're putting in and everything. But obviously we're not even close to where we were in Q3 of 2020, which was $63. So we still got a little ways to go, but I mean, I'm guessing, honestly, with February and March still to get filled in, we have a chance to surpass what we made in the third quarter of 2020. So if you think so, let me know and put it down in the comments below if you guys think that we'll surpass that, and make sure you're subscribed so you guys can follow along. Obviously, these are videos that generally people will either listen to in the background or we'll kind of just have on the wayside when they're doing other things. So when we talk about this stuff, of course, we're talking about, the longevity of this stuff, of, making sure that what we have invested now will grow to these crazy levels of dividends. So let me switch back to my camera here so you guys can see me. Hello. So I mentioned DLR. So I wanna kind of show you guys something here. Actually, let me go to the actual stock here. So DLR is in my real estate. So you can see DLR right over here. In total, right now we are up $59.39 in total gains, 51 of that being market gains, and then almost $8 of that being dividends. So the reason I want to show you that is, so I'm obviously positive in this stock right now. But here's a really interesting thing. This is what I love doing as a long-term investor, is if I believe in these companies long-term and things have gone up and down for these companies, while they're down, I like to put more into them. So let me see if I can find it. So you could see right over here, first and foremost, how many times I bought into DLR in December is crazy. I even have one at $70, $40, $22 right here, 15 and 15. Like, this is buying a lot into a company. Obviously, it's not large dollar amounts, because there's people out there putting hundreds, if not thousands of dollars into stocks. So if you're worried about that stuff, like, look at this, man. I put in like $15 in here. So there's not a lot going on when it comes to the amount that I'm putting in, but it's the sheer fact that I'm being consistent and I'm doing what I can. And that's the really big key to being able to get to like that 22,000 you saw. It's just me being consistent. That's really all it is. But I've been putting all that stuff in because, let me click on here because I think it'll tell me. So when I was buying into this, the share price was $128 a share. And the reason that's important is if we go back in here, I'm going to show you. So for DLR, 120, I think I said 128. That was way lower than my average price point, and now it's at 148. If I knew that the price was for sure going to go up that quickly, and if I had more funds, I would have put more into it. But that's what I did. I dollar cost averaged, which was called a DCA for a lot of people, is when the stock price is lower than your current share price. That's called dollar cost averaging, and that's what I did. And now that the stock went up, you can see where it was flatlined right here. This line right here. So look, that's December. Boom. That's when I was buying. Nothing was moving for the stock. It was going down. The reason this line here isn't lower is because I kept buying into it. So every time I bought in, the stock would go down in price and go down in price. And eventually it started picking back up. But here's the cool thing too, as a dividend investor, let me close that up. Oops, didn't mean to close that whole thing off. But as a dividend investor, let me go to the dividends only now. So the last time I got paid out was back in September for DLR, and it was $1.95. So now for January, because of all of my dollar cost averaging, not only did I get the value in the stock growth, obviously until I sell, I don't actually have it, but I also gained so much more in dividends, which was $4.62. So that's a huge increase from where I was before. And check it out. Look, a year ago, I earned 23 cents from this company. So I've held them for well over a year at this point. First time I got paid out for them was 23 cents. Now a year later, just 1 year later, is $4.62. That might not seem like a lot for a lot of people, right? You're like, hey, $4.62, like what am I going to do with that? Probably not a lot, but it's all about long-term growth, right? So if in 15 years, imagine what I did in 1 year and what I can do in 15, right? So a lot of people that follow along with me, I'm here on Seeking Alpha, making sure it's on screen. I use this thing called dollar cost average. Or not dollar cost average, dividend growth. And so right over here, we're going to go to Seeking Alpha's page here for DLR. And what we're going to do is click on the dividend news. And sometimes it has like all this crazy news on here. But what I want to do is show you how, right over here, back in February of 2020. So this was last year. They haven't done an increase yet for this following year. So hopefully, actually next video, they should be doing the February 2021 update, and we should be expecting a dividend increase. Hoping it's bigger than this, but as an example here, they increased their dividend by 3.7%. So they took their shares from $1.08 to $1.12. Not a big difference in dollar amount, right? But percentage-wise, 4% almost is better than some people's raises that they get at their jobs. So just imagining if you have like thousands of shares of this company, how big of an impact 4 cents per share could be. And then hopefully if it's bigger in the future, like the year prior, it was almost 7%. And then the year before that was almost 8.6%. So yeah, you can just see that over time, these companies are increasing their dividends, which is fantastic because that is what gets you to really good places with dividends. So there's this thing called yield on cost. A lot of people don't know about this. So if you don't, I would encourage you to learn more about yield on cost. So this chart kind of works backwards, and I always mention that just to make it easier for people. So this is where we are currently. So this is, current, and then this is 5 years ago all the way over here. So this is, 2016 or something like that. So right now, if you're buying into DLR, you're at about a 3% yield. Not bad. I mean, pretty solid for a yield across the board. But if you were to have invested 5 years ago, let's say you didn't buy anything more into the stock, let's just say, give or take, depending on where you buy in the stock price, you would be having a dividend yield of 5.81%. That's a really solid dividend yield for just 5 years. I mean, that's all because of the dividend growth that happens. You saw that 6 point something percent, that 8%, even the 3.7% still had an impact on that yield on cost. So if you're buying more throughout the years, that cost will kind of fluctuate a little bit, but effectively buying in and having these companies raise their dividends year after year is a huge thing. Let's see what the 10-year would be. So 10 years, let me clear this up. So 10 years would be 8.6% dividend yield. Like that's really solid, having 8% within 10 years. So, for a lot of people that talk about, hey, let's get 4% on dividends now, I care more about dividends in the future. Like, unless you're somebody who is needing to live off of dividends very soon, like within the next couple of years, like 3 to 4 years, maybe a 4% dividend yield would be more than adequate because you do need that income coming in. But for somebody like myself who doesn't need this money for another 15 years for my goals, not my retirement because I have other things in retirement, but just for my actual goals, I'm okay with a 3% yield, knowing, or hoping, I should say knowing, because we just don't ever know where the future exactly takes us, but hoping that even they have a similar, trajectory over the next 10 years as they did in the previous 10 years, that I can expect to maybe get 8, 9, 10, maybe 11% dividend yield on my money, which then makes it really valuable because when I get these nice payouts from DLR, they're going to look even better without even having to do anything more with them. Now, when I talk about this stuff too, again, I just like to really emphasize how important it is to make sure that you're investing, even if it doesn't feel like you're investing a lot. We're talking about DLR, right? I have a total, I put in a total of $681, which equates to about almost 5 shares of a company, because M1 Finance does fractional shares, which again, as a quick reminder, I'll have the link down below if you guys want to check them out for that $30 bonus before the month ends. But yeah, I mean, 5 shares is not a ton. Obviously, I would hope to have more, especially when it was down. But nonetheless, it's moving the needle forward for me. And of course, I have 28 shares or 28 stocks in total with M1 Finance. So DLR is just getting a small portion of it all. I got different companies in like my tech pie that it's getting more, like Microsoft and Apple. But I like being diverse. I like having a little bit of something in all different places, because I think that that's going to help me out in my goals and what I'm trying to achieve very long term. So keep on focusing on like what I'm doing, because that's like the biggest goal for me, is making sure that my dividends are growing. You guys saw, with my dividend income, 2505 for the month. Fantastic. I'm going to keep working on that as well too. But I want you guys to keep on learning and growing with this platform and with investing and with everything else. So check out my video right over here to honestly keep on learning, because it's going to help you out in your process when it comes to getting with investing, feeling comfortable and feeling confident. My name is Dennis, and I'll see you guys in that next video.